to the Retirement with and On Purpose podcast. I'm your host, Trevor Lawson, and this show is all about helping you not just reach retirement, but truly thrive in it. You've put in the work, now let's make sure you can enjoy every moment to the fullest. Today's topic is one that comes up rather frequently with folks when we're planning for retirement, and that is the topic of, do I need life insurance in retirement? I wish we could give you a one-word answer and end the episode right there, but this topic does warrant a little further unpacking and one that's not as straightforward as we may hope. Some common reasons for life insurance in retirement are to pay off lingering debt. So let's just say, you're retiring and you still carry a mortgage or a car loan or student loans, which nowadays is very common. But you want to make sure that if something happens to you, your spouse or another loved one is not left with that debt. Then we'll oftentimes see folks carrying life insurance in retirement to protect against their loved one inheriting that potential debt. Another reason, and probably the most common reason, frankly, is to leave a tax-free legacy behind. So life insurance is one of the few assets that is left behind fully tax-free to the beneficiary. So for folks that are, wanting to leave money to spouse, kids, grandkids, life insurance still provides a wonderful tool to be able to do that and do so in a tax-free manner. Three final reasons people will consider carrying life insurance in retirement, and these are specific to the individual and their dynamics. But one is paying potential estate tax liability. So for folks that have amassed a rather large estate over the course of time, and their net worth is very high. Let's say their net worth and what they intend to leave behind exceeds the estate tax exemption. Any amount over that estate tax exemption is going to be taxable at a very high rate. And so we'll see folks have life insurance in place to pay off the estate taxes and thereby allow the majority of their estate to be left behind free and clear of taxes. Two final reasons. Nowadays with 401ks, IRAs, think, pre-tax retirement assets for non-spousal beneficiaries. So kids, grandkids, those that inherit these 401ks and IRAs that have not been taxed are required to liquidate that account within a 10-year period and pay taxes along the way. So in some cases, folks will have life insurance in place to pay off the tax liability on that 401k and IRA and thereby allow the non-spousal beneficiary to receive that asset free and clear of taxes because the life insurance was used to pay the tax liability. Lastly, and this one's a bit unique, but we do have clients who have family businesses, and one child is going into the family business, one child is going into another profession, and the child that's going into the family business has a much larger asset that it's going to be receiving. So families, in efforts to equalize their estate, may have a life insurance policy where the child that's not going into the family business, they're the beneficiary of that. And therefore, on the hypothetical date of death, the value of the business that the child who's going into the family business is receiving and the life insurance death benefit are very comparable. And so it just makes the family feel better and feel more fair in what they're able to leave behind. So those are some of the very common reasons we see for having life insurance in retirement. The two most common reasons not to have it are, one, there's no desire to leave a legacy. Let's just say, you're not married or don't have kids and you don't have a real desire to leave monies behind to any individual or charitable organization, then there's oftentimes not a traditional need for life insurance. Secondly, in some cases, life insurance can be very cost prohibitive to keep over time. Let's just say you've had a change in your health and you're able to get approval for life insurance, but the cost is very high as a result of, substandard health. It may or may not make sense from a financial standpoint to fund that investment vehicle, the life insurance, because of its cost prohibitive nature. And then, secondly, sometimes folks will have a term policy, but again, their health has changed, and as the term policy is coming up on its expiration date, they're able to renew the policy on an annual basis, but they're unable to go out and get new life insurance coverage. So they start to kind of renew the term policy on an annual basis, but then find that the premium is just getting astronomically high. Again, if it's too cost prohibitive to keep it, it may or may not make sense to continue it into retirement. So once you kind of have thought through the reasons for and against it, if you do decide, hey, I do need life insurance for one of the reasons mentioned, or frankly, maybe one of the reasons I didn't mention, then it becomes a consideration of, do we look at term or permanent insurance? And term insurance can make a lot of sense for those that are carrying life insurance into retirement to pay off a lingering debt. So let's just say you've got 10 years left on the mortgage, and then that you'll be free and clear of any and all debts. It may make sense to just have, a 10-year term policy. That way, if something does happen to you prior to the home being paid for, the life insurance can finish honoring your commitment to pay off the home. But once the home's paid for, you don't really have a need for it. Term insurance could be a viable solution. For those that are carrying life insurance for other reasons, whether it's just to ensure they're able to leave tax-free money behind, or they're wanting to pay a potential estate tax liability, permanent insurance tends to be the more popular way to go, just because it's designed to last as long as we live. And therefore, since we don't have that crystal ball knowing when we're going to pass away, the permanent insurance does give us some peace of mind knowing that whether we're 85 or 105, the money we're putting aside into this permanent policy is going to leave a legacy at some point in the future. Finally, if today's conversation has created more questions than answers, then I would encourage you to consult with a professional that carries the CLU credential, Chartered Life Underwriter credential. That credential demonstrates expertise in life insurance planning. So if after today's discussion, you've got more questions than answers, I allow this to prompt you to potentially reach out to a CLU and get clarity on whether or not life insurance is warranted for your situation, and if it is, whether term or permanent insurance makes the most sense. Until next time, stay well, and I'll look forward to connecting again soon. Take care. Thanks for tuning in to the Retirement with and On Purpose podcast. I hope you're walking away with new ideas and a fresh perspective on how to make the most of your retirement journey. And remember, retirement isn't the end. It's your time to live with purpose. Until next time, I'm Trevor Lawson. Here's to a fulfilling and thriving retirement.